This is Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. The Trump-Musk feud explodes into public threats and recriminations with massive government contracts cut and the world's richest person calling for the president's impeachment. The war of words seeing Tesla shares plunge, weighing on tech megacaps and the wider markets. Asian stock futures are also pointing lower. And the feud overshadowing the long-awaited phone call between the US and Chinese leaders, agreeing to further talks over tariffs and rare earth minerals.
Yeah, it was a very busy session overnight because the positive sentiment coming from that 90-minute call between President Xi Jinping and President Trump really being overshadowed by this online bickering between President Trump and Elon Musk. And you can see right now U.S. futures are a little bit mixed, but when it comes to the Nasdaq 100, futures continuing to lose ground, down about 0.1%. And don't forget, we also had jobless claims numbers jumping, surprising to the upside ahead of that very important May's payrolls numbers that are expected to be softer than originally forecast, especially from the previous month. But really to do with what's happening with Tesla, we couldn't take our eyes off on this spectacle with Elon Musk now saying that President Trump's tariffs will cause a recession in the second half of the year. The former allies have been engaging in a public war of words with SpaceX deals and Trump's signature tax bill caught in the crossfire.
I've always liked Elon, and so I was very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
Let's bring in Bloomberg Washington reporter Kate Sullivan. And Kate, in a way, we kind of knew that this was coming, right? We have two very strong personalities working together, but the fact that this escalated so fast and it intensified to a point where Elon Musk is talking about what, even Jeffrey Epstein at one point?
I honestly don't think anyone is surprised that this political breakup is happening. As you mentioned, we'd seen signs of the strain in their relationship for a bit. And Musk has, of course, now officially left his position in the administration. But I will say that it has been absolutely extraordinary just watching this unfold today. I think the how explosive it has been, the intensity and the level of the personal attacks, and the scale of what's at stake here, and also just how quickly this devolved. I mean, just a few days ago, Musk and Trump were together in the Oval Office, praising each other and saying that, Musk would always be a friend and advisor to Trump in some capacity. And now where we are is, Trump is threatening to cut Musk's government contracts. It's tens of billions of dollars of contracts. And Musk is throwing absolute grenades on social media. He's saying without evidence that Trump is named in the Jeffrey Epstein files. He said the only reason that Trump won the 2024 election was because of Musk. He's saying the tariffs are going to cause a recession. And now he's saying, as you mentioned, that Trump should be impeached and replaced by J.D. Vance. So it's truly one of the most epic, messiest political breakups that we've seen play out. And I do think a lot of people saw this coming.
And was this all really because of the fallout over EV credits and the tax bill?
It's, it all started with Musk criticizing the bill at large, with this bill that Trump calls the big, beautiful bill. Musk is arguing that the bill would add to the deficit and undermine efforts to reduce what he's saying is wasteful government spending, which, of course, was the whole reason for his tenure at Doge and his position at the administration was trying to make these cuts to government spending. Trump is very protective of this bill and has been very personally involved in trying to get it passed because, so much of his legislative agenda is wrapped up in this. And so he wants to see this passed quickly. He said that he wants this on his desk by July 4th. And so Trump is arguing that Musk doesn't like the bill because it doesn't have these EV credits that would help Tesla, which would, of course, help Musk. Musk has denied that, and he keeps saying, I've always known the position on EVs. I've always known that that's, Trump has been very vocal about EVs. And so he's saying it really is about the spending and the deficit. But so it started, about the bill, but it has, of course, really devolved far beyond the bill.
Yeah, and far beyond and into real threats that could actually affect these government contracts on Elon Musk's companies. But at the same time, given the legality and how complex the environment is around those contracts, what's the feasible fallout that we could see from this very public feud?
It's a great question. I think we're still trying to get a handle on that because, there have been a lot of threats made. Trump could, of course, just end all of the government contracts, or at least part of them or some of them. Musk has already even without the contracts being ended, he's already said that he's going to decommission SpaceX's Dragon spacecraft that it goes back and forth between the International Space Station and does a lot of work with NASA. So, you're seeing a pretty immediate effect here. I think it could also affect the path forward for this, big, beautiful bill. And I think you might have more Republicans coming forward, maybe questioning more about whether this does add to the deficit, which the CBO report says it does, and just raising more of these concerns that Musk has raised. So it might delay passage. They might have to really rethink the strategy here, which would, of course, very much frustrate Trump, who has been, very personally involved in trying to get this passed. But overall, I think when you have two of the most powerful men on the planet feuding like this, it's going to be explosive, and that there's going to be a very big ripple effect.
It comes at a time when there's enormous pressure points for President Trump, like both legislatively, domestically, the situation when it comes to Ukraine and Russia and the ceasefire negotiations, not to mention this even overshadowed US-China and that long-awaited phone call. There's a lot on the president's plate at the moment. Does he kind of need a win with this bill?
Oh, absolutely. I think that, Trump campaigned on, he made so many campaign promises that I think he's now running into, he's realizing that, he can't end the war in Ukraine in 24 hours, as he said that he could do, that it's proving harder to get a ceasefire in Gaza, that, he thought that I think he thought that it would be easier to negotiate with China. He praised Xi so publicly for so long. And now you're saying, it's actually really hard so he's sort of publicly admitting how difficult this is. And so I do think that this bill would be something that would be a very important thing for him to be able to tout. It has these tax cuts. And so I think you're absolutely right. I think it would give him, he's looking for a win. He's looking for something to really tout to his constituents at a time where, there are a lot of fires that he's having trouble to put out.
Bloomberg's Kate Sullivan at the White House. And another one of those fires is, of course, the relationship with China. And this Trump-Musk feud has stolen the thunder somewhat from the news that China and the US have agreed to resume trade talks in that long-awaited phone call between Trump and Xi Jinping. Our Chief North Asia correspondent, Stephen Angle, is in Hong Kong. So, Steve, we weren't sure if this phone call was happening. And certainly Beijing has been very conservative in its communications. It did happen. What did we learn from it?
Yeah. Well, I think the real drama was just the waiting whether this was going to happen or not. There had been long promises from the White House spokesperson, Ms. Leavitt, that a call was imminent, and we were sort of skeptical. It finally did happen. No fireworks. I mean, it was downright dull, the phone call between Xi Jinping and Trump, compared to some of the theatrics going on, of course, on social media between Trump and Elon Musk. As Kate just said, there were no grenades lobbed between Trump and Xi Jinping. They said the right things, according to the readouts, at least. We didn't hear the phone call, obviously. Donald Trump agreeing with Xi Jinping and Xi Jinping agreeing with him that they, will further trade talks. They'll get them back on track. Trump admitting that they had gotten a little off track from that Geneva truce last month, and some of the temperature had obviously escalated in weeks without having that top leader phone call, which lasted 90 minutes overnight. Donald Trump assessing after this call that they're in a very good shape right now. He also said essentially that they discussed very complex stuff and they were able to resolve some of their differences. But the problem is, again, there wasn't a lot of specifics. We don't have the details on whether he made certain concessions to the Chinese and whether the Chinese offered to relax some of those export controls on rare earth magnets, which are a critical part of contention for the United States on why they essentially said that the Chinese had violated the principles of that truce in Geneva. Let's hear from President Trump.
I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points. By the way, he invited me to China, and I invited him here. We've both accepted. So I'll be going there with the First Lady at a certain point.
So again, it was a significant turn in what's been a roller coaster relationship between Xi and Trump, simply because they had not been speaking. In fact, this was the first time they have talked since the inauguration. They talked right before that, I believe. And definitely this is the first time they talked since the trade war really erupted and all those global tariffs were put on trading nations, including China, the highest, which has come back. But again, Xi Jinping, in the Chinese readout of this phone call, which was more sharply worded than Trump's assessment of the phone call, essentially urged Trump to remove the negative measures the U.S. has imposed on China. Those negative measures at the top of that list would be those tariffs.
And Steve, despite the fact that we saw perhaps that smoothing of ties between President Trump and Xi Jinping, there were others in Trump's administration that were still calling for harsher measures against Beijing.
Well, sure. The ongoing trade differences do not go away because they had a 90-minute phone call. So you have Treasury working on the currency report, and then you have the Commerce Department, Howard Lutnick, also giving testimony essentially about and calling for more agents to make sure that exporters and warehouses are complying with their export controls in China. So China, according to Howard Lutnick, to prevent China from stealing critical U.S. technologies. This is what the Commerce Secretary, Howard Lutnick, had to say on that matter.
They are trying to copy our technology. And in the race for AI supremacy, they are behind us, but they are working with the central government out to get us, right? To beat us so that they will have intellectual superiority over us.
So again, as I said again and again, that 90-minute phone call does not resolve all the issues. It barely even moves the needle on U.S.-China differences. Again, I mentioned Treasury Department earlier. There's this semi-annual report that Treasury has to give on currencies and currency manipulators. They did not name any country as currency manipulators this time, but they did single out China for its lack of transparency on its FX policies, which they have long claimed, of course, has exacerbated this record trade deficit that the United States has with China.
Right. Our chief North Asia correspondent, Stephen Engel, there with the latest on those trade negotiations and, of course, how that's affected markets. We'll be discussing this with our next guest, not to mention, of course, a Trump-Musk fuel as well. Let's bring in Bloomberg Jonathan Levin with us. And, Jonathan, we saw really the pressure overnight. We continue to see the pressure on U.S. futures in the Asian session. How much of this is related to the fact that really investors, ourselves, we can't look away from the train wreck that's happening right now between President Trump and Elon Musk? And how much is it that really nothing concrete also came out of the China negotiations?
Yeah, I mean, I think at the end of the day, China is a lot more important than what's going on with Trump-Musk. Trump-Musk, of course, is important just because Tesla is an enormous stock in the S&P 500. So, like, sheer mathematics is going to, make it such that it has a big impact when it has a drop of this magnitude. But I don't think it really moves the needle on the macro. I mean, how is this going to actually change the fiscal conversation? I assign a close to zero probability that they are going to completely scrap this bill and walk away from extending the 2017 tax cuts. And of course, that's really where the rubber hits the road. Maybe this sparks sort of an interesting conversation about some of the niche Trump campaign promises that are in this bill. Maybe we see a little bit of a walk back of things like no tax on tips, things like deductions for auto loan interest. Maybe we see further discussion about this state and local tax cap. But at the end of the day, I don't think that any of these things are huge macro issues. Maybe it means a few basis points on the 10-year Treasury yield, but I don't think it's going to dictate where the S&P 500 is going over the coming months.
When it comes to Tesla, there was this sort of a palpable sigh of relief when Musk said that he was going to spend less time at politics and kind of refocus his attention to the business and his other businesses, right? But how much of a distraction is this for the company, if not the broader markets? Because we've seen markets kind of have been a little bit bored by the politics story and even by the tariff story, right? What's the bigger driver?
Yeah, well, it's tremendously consequential for Tesla, above all because of brand value here. I mean, here is an individual who, by joining forces with the Trump campaign, made a heck of a lot of enemies among Democrats in the United States market. And now he's turning his back on a very unique politician in the history of U.S. politics, a guy who is certainly divisive, that's Donald Trump, but who has a diehard core base. So after having alienated Democrat consumers and now getting into this feud with Trump, you sort of have to ask yourself, how many people are left to buy these Teslas? Now, in terms of the broader market, I think that it ends up being very niche. Again, Tesla is a big stock. It's going to affect the index just because of its weighting, and it's sort of an emblematic stock. I thought it was interesting that you saw stocks like Palantir and Supermicro sort of falling in sympathy here. It's representative of that. I don't want to say meme trade, but it's this trade that is very, very popular on social media. It's sort of representative of what's going on in sentiment. And so, it can go a little bit above and beyond Tesla, but it can only go so far.
And Jonathan, of course, very consequential, though, what the Fed will do next. And we had jobless claims numbers unexpectedly jumping overnight. And we are headed to the very important payrolls numbers. How will this factor into the levels of the markets in the next few weeks?
Yeah, well, as you say, the macro is really where the rubber hits the road. We've had a lot of volatility in the news cycle over the past couple of months, as we all know, with tariffs and now this situation with Musk. But the remarkable thing is, we were right back near 6,000 on the S&P 500. And what that tells you is this market is looking for the next shoe to drop in macro. The backdrop here is that the labor market has been hanging in there. I mean, a 4.2% unemployment rate is nothing to sneeze at. We've had these tech superstars like NVIDIA and Microsoft really putting the S&P 500 on its back with some pretty strong earnings. And the consumer is still kind of doing its thing in the United States of America. I mean, if you look under the hood in some of this high frequency data, yes, we've seen softening in the months of April and May, but it's not a collapse. And so investors are really just waiting for the next shoe to drop. They'll be looking closely at this jobs report tomorrow. They'll be looking at some sort of telltale sectors like leisure and hospitality. And they'll especially be watching those initial jobless claims as we get into July, when we're really going to start to feel those tariff impacts in the macroeconomy.
Bloomberg opinion columnist Jonathan Levin there. More ahead on the Asia Trade. This is Bloomberg. Ukraine says Russia has launched drone and missile attacks with explosions heard in the capital Kyiv. In Washington, though, President Trump says he might let Ukraine and Russia, quote, fight for a little while before brokering a peace deal as he meets with German Chancellor Friedrich Merz. Bloomberg's Michael Heath joins us now. I mean, this is not a schoolyard fight that we're talking about where you let them just kind of, resolve it amongst themselves.
Yeah, I mean, it's sort of this disinterested observer kind of commentary that we've got from President Trump, and the notion that he used the example of an ice hockey game where you let them battle it out a little bit before intervening, and I don't know what he thinks has been happening for the last 3 years, right. But I mean that's exactly what's been happening, and this idea of this comment that President Vladimir Putin got hit, so he'll have to respond, and got hit hard, and this sort of thing, and also he mentioned this sort of false equivalence of Russia and Ukraine both being equally to blame here, and it's like, well, only one country's invading, sort of thing, and him saying he's prepared to put sanctions on both, if they're not keen for peace. I mean, there's only one side that has been resistant the whole time, and it's sort of this is a pattern that's emerging. We talked yesterday a little bit about what we're seeing in President Trump's foreign policy, and he does face a myriad of challenges, but he also he just seems to go very soft when it comes to dealing with adversaries of the US or people who aren't prepared to I mean, people he sort of seems to have some respect for, these strong men, but who won't play ball with him. But anybody who tries to be reasonable, he treats sort of quite contemptuously, and poor old Ukraine seems to be falling into that camp now.
What are European leaders saying about all this?
Yeah, well, Shery, Chancellor Merz is obviously in Washington, and he's got a delicate balance because he's got to try. Europe needs to try and strike a trade deal with the US as well. But he remained strongly on Europe's message that Germany is behind Ukraine, that Russia is to blame for this, and the best thing that the US could do is obviously impose more sanctions. They've got some that are ready to go in Congress, and that that Russia needs to be pressured more, which sort of is the consensus opinion out there as well. They're very worried that President Trump, will turn his back on this issue. I mean, we remember during the campaign he said he could solve this in a day. Then it was by Easter, and now this talk of letting them fight out a bit longer. I mean, he really doesn't have any solution to what's going on. But Europe has remained fairly consistent, and their resources are limited. That's the issue here, and the US is really not providing them with much help, even in terms of trying to offer some sort of settlement that might encourage Russia to get to the table. So they're just trying to be stoic, I guess, at this stage, and hope that the US, stays in the game. But the comments from President Trump really aren't very encouraging on that front.
Bloomberg's Michael Heath there with us on the latest. Coming up on the Asia trade, we'll be talking about what the next steps are when it comes to these global trade negotiations with Asia Decoded and the Carnegie Endowment, plus Principal Asset Management will be along with us to talk market strategy given all of this ongoing volatility. Much more ahead. This is Bloomberg.
Take a look at how U.S. futures are trading early in the Asia session. After a very difficult day overnight on Wall Street, we had really the President Trump and Xi Jinping phone call boosting stocks. We saw some earlier gains, but the online squabbling between President Trump and Elon Musk hitting Tesla, weighing heavily on the mega cap tech space. You can see Tesla now rebounding a little bit after a loss of more than 14% in the overnight session. We also were watching the dollar because it fell to this year's low after that ECB meeting, with the euro on the other side surging after Christine Lagarde said that officials are coming to an end of rate cuts, but ended little change given, of course, the weekly jobless claims data also surprising to the upside. Right, we're getting April household spending numbers out of Japan falling 0.1% year on year, surprising to the downside for the month of April. The expectation was for growth of more than 1%. It's also a big deceleration from the previous month when household spending actually rose more than 2%. It's been a very volatile data set. We actually saw this number contracting back in February as well. But suffice it to say that you're seeing really the significant impact from the inflation trend continuing here in Japan above the BOJ's 2% target. And of course, household spending is a big component of the GDP numbers here in Japan. And we saw for the first 3 months of this year the economy here contracting. So we'll continue to watch how this plays into the next set of GDP numbers as well. Of course, we're watching whether Japan goes into technical recession as well. Of course, while we keep an eye on Japan, trade negotiations front and center as well, especially at a time when President Trump and China's Xi Jinping have agreed to further trade talks to resolve disputes over tariffs following a 90-minute phone call. It was their first personal exchange since the tariff war began. Joining us now is Priyanka Kishore, founder and principal economist at macro consultancy Asia Decoded. Always great to have you with us. I mean, we did see the conversation. It was something better than nothing, but at the same time, not necessarily many details coming from both sides when it comes to easing these tensions. Semiconductor exports also, of course, an issue still. What do you make of the latest talks?
Well, you've hit the nail on the head. It helps diffuse the situation. It raises chances that we will actually see the U.S.-China trade pause, tariff pause last in entirety for its 90 days. But let's be clear here that the situation between U.S. and China has deteriorated significantly and rapidly in the last few months. And it's going to take more than just one phone call to reset that relationship. From my end, I'm going to be watching if those trips that have been discussed between Washington and Beijing actually materialize as a sign of this is actually leading to some sustained de-escalation.
How is Beijing looking at the negotiations right now? Because President Trump just called this trade deal in a very good shape. But at the same time, China's statement coming from the foreign ministry about what President Xi had achieved didn't necessarily seem as optimistic.
I think that's always have been the case. The Trump administration is quick to blow up its wins out of size, claim that quick trade deals are coming through and the U.S. is doing great, whereas we don't necessarily hear the same sort of optimism from the other side, and especially in the case of China. And it just takes me back to that point that we should not take these things at their face value. We don't even have much details yet as to what was discussed, and we'll have to wait and see how things pan out.
Priyanka, obviously this is the most watchful trade relationship for other reliant economies, particularly around Asia, right? How much diversification do you think is going on, or are the fates of some of these, other export-reliant nations still really dependent on what happens between China and the US?
Ordinarily, this kind of escalation between these two countries would have been a positive from a supply chain diversification perspective for the preferred alternatives like ASEAN and India. On the contrary, what we are increasingly hearing is cautiousness because businesses really don't know what's going to happen to tariffs. They don't know if tariffs go up next in the country that they relocate to. And then clearly, Trump's agenda is America first. It's not China plus. And we can see that very openly being said in terms of Apple and its production in India. So in the short term, it just freezes investments, which is clearly not good for the global economy.
Priyanka, in the absence of economic strength coming from China, where do you think that sort of demand story might be finding, a replacement or a diversification? Is India's economy in a robust enough state to be able to withstand all of the trade uncertainties?
So, the answer to that is that one has to look inwards at this point of time to at least buffer up their domestic demand to guard against the heightened external uncertainties. It doesn't completely take away from the downside push that you're getting from the external side, but it does help buffer your demand. India had a good Q1 outcome, but beneath the headline figures, you still see that private demand growth is sluggish. And so what it needs is more policy support coming in. We have the RBI today, and the central bank is expected to cut. And so we should see more macro policy support come in, not just in India, but across the region to support domestic demand.
Priyanka, an interesting view that I got when I was just in Seoul for the presidential elections this week was that some analysts were concerned that the U.S.-China negotiations were accelerating because that would mean perhaps less concessions for other U.S. allies and less sort of need to achieve a win on that front. Could that be a consequence of having Beijing-Washington relations move much further and faster than, say, relations with India, trade negotiations with South Korea?
That's definitely something, it's the uncertainty. We don't know what to expect. From the other side, I could just argue that given how much Beijing is benefiting from just holding off and pushing back, it gives other countries, especially in, ASEAN, which is kind of caught between the tensions between US and China and is being pushed to choose sides, to just stand back and see how things evolve and maybe once Washington and Beijing come on somewhat of a safe page, the U.S. just lets these other countries go, and they don't really face huge tariff hikes without doing much. So it could play out either way.
Priyanka, really great to have you with us. Priyanka Kishore, founder and principal economist at Asia Decoded. Chinese food delivery giant Meituan is betting big on drone deliveries to aid its ambitious international push. The Vice President, Yinian Mao, told us about plans for a first drone delivery route in Hong Kong and further global expansion of the technology.
I think globally, in many major cities, there will be low-altitude logistics network. That's our vision. Number two, out of all instant delivery orders, we're looking at maybe 10%, 15%, roughly that ballpark that can be delivered in the air. And in some scenarios, for example, emergency supply, medical delivery, you may see a lot more adoption, higher percentage of penetration in those segments.
So where's next? I'm hearing Dubai. What are you doing in Dubai?
Yeah, so we just received our commercial license in Dubai. That's December last year. And we're opening up some new routes this year as we speak. It will be highly visible. It will be on the waterfront of the Dubai Marina or some Bay Area. So we also want to raise awareness in that city because people know there's a drone delivery, but they cannot experience it yet. A lot of people are not covered by the service. We want to cover more. We want to cover in more public areas.
Where else are you potentially looking at? I mean, obviously international expansion is how much of a priority?
I think it's very much on our priority today because if you look at mainland China, right? So Meituan is the biggest player in terms of instant delivery and everyday services, but we are not that big player yet overseas, right? So that's on our priority. Secondly, for us, especially for tech-driven, service provider, replicating tech as a service is relatively easy than replicating a team of personnel on the ground. So we want to bring our expertise to other countries, serve other users, and we got to do it step by step. But we are also making progress.
I understand you have about 40 routes in Shenzhen.
Close to 50 now.
Close to 50, yeah. But I heard 55 nationwide.
Yeah.
So mostly in Shenzhen. Where else can you expand, and will you be expanding this kind of service in mainland?
The second city that we choose after Shenzhen is Shanghai, because you also have Huangpu River. The Shanghai is separated into two parts, like Pudong and Puxi. There's a Huangpu River right in the middle.
There's logistical challenges with the river.
Exactly. Both a challenge and an opportunity, I would think. From day one, it has been a challenge for us, always. We're looking into new technologies where possibly drone can deliver to a balcony. That's one technical area where we're looking into. But secondly, we're looking into robotics technology where a robot can help you to pick up that order from outside your apartment building into your apartment or right in front of your apartment door.
How far away from that? I mean, how far in the R&D process are you?
I think we're looking at the 5-year scale, but I believe the progress has been made. Not only us, right? A lot of other robotics companies are making progress today.
From sandbox to commercial viability, when do you see that happening first in Hong Kong?
I would say maybe in 3 years.
3 years.
Yeah.
What about in Dubai, where you're now launching?
Probably 18 months.
18 months to have commercial viability?
Yeah.
So
some selected routes. We have selected routes to. Yeah.
How do you see the competitive landscape in China and Hong Kong changing the way and the urgency that you have to roll out this kind of technology?
We're going to turn back to norm. And that's basically cost, revenue, margin. And I believe in the long run, tech-driven innovation can drive costs down. That's in the long run. But in the short term, we need more investment.
Meituan Vice President Yinian Mao speaking with our Chief North Asia correspondent, Stephen Engel. We have more ahead on the Asia trade. This is Bloomberg.
I've always liked Elon, and that's why I was very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
President Trump speaking in the Oval Office about his falling out with Elon Musk there. Well, this escalation in Musk's public feud with President Trump has raised $34 billion from his personal net worth. That's the second largest loss in the history of the Bloomberg Billionaires Index, which tracks the 500 wealthiest people on the planet. Post by post, their day of online sparring chipped away at Musk's status as the world's richest person. And this rift may also put at risk the United States' ability to send astronauts into space. Bloomberg's Paul Allen joins us now with more. And we've seen sort of the impact on Tesla, of course, and watching now the impact on SpaceX. And it's on both sides, isn't it? It could threaten government contracts, but is Musk also threatening the supply of his technology?
Oh, absolutely. And he knows that he holds some cards. And just look at this comment that he's going to decommission the Dragon spacecraft. I mean, the Crew Dragon right now, it's the only way for US astronauts to get to the International Space Station. This is the only way to get freight there as well. And it doesn't end there either. The Falcon 9 is responsible for lifting defense satellites into space. The Pentagon relies on it. Since 2000, SpaceX has got $22 billion in unclassified defense contracts. It's got a $4 billion contract to put NASA back on the moon. Another $840 million to decommission the space station at the end of this decade. So yes, it is all crucial revenue for SpaceX, but any US government agency that needs access to space needs SpaceX, and Elon Musk knows this, which is why he's making this threat to decommission the Crew Dragon.
Yeah, are there any alternatives at this point?
The answer is kind of, but none of them are quite in the same league, and some of them are quite unappealing. So let's run through the options. There's Blue Origin, United Launch Alliance. They're a long way behind in their development schedule compared to SpaceX. We did see Boeing's Starliner try to dock with the International Space Station, but we all remember where that went. It ended up with astronauts stranded up there, so the Starliner's not really ready to go either. We are seeing shares in Rocket Lab rising at the moment, up 6.4%, but Rocket Lab can only get 300 kilograms to low Earth orbit. SpaceX's Falcon 9 can get over 22,000 kilograms to low Earth orbit. So between SpaceX and its competitors, there's really just daylight. There is one other option, and that is, of course, the Soyuz capsule, which is operated by Russia. The last time a US astronaut traveled on that was April this year, but the time before that was March 2024. So that's not a place that the US likes to go, obviously in the context of the current conflict with Ukraine. So to have President Trump suddenly relying on Russia to get US astronauts to space, I think would start a whole new news cycle there.
Yeah, Bloomberg's Paul Allen there. In fact, Ross Gerber, one of Tesla's earlier investors, says a feud with President Trump is a disaster for Musk. The head of the investment firm Gerber Kawasaki told us the spat has ramifications beyond just Tesla's stock price.
This is a disaster for Musk. I don't know if I can spin it in a positive way, because it's just so beyond any intelligent businessman's behavior would be. I can't imagine after putting Trump in there, that he would then turn Trump into an enemy of all things, because he's still the president of the United States. And Elon just tweeted something like, well, I'm going to be around for another 40 years and he'll only be around for another 3.5. And I think that's really ignorant thinking, because Trump is president of the United States, whether we like it or not, and Elon's going to have to live with this for quite some time, and it could be very detrimental to him and his companies.
And this brings up a good question just about leadership in general. There's been a lot of talk when with this new administration, how CEOs were able to navigate, and we've seen a lot of CEOs do it well. For better or for worse, a lot of them have gotten pats on the back for the way that they've courted this administration. Understand that for better or for worse, these are the people in power, and you have to at least appease them to some extent. And I do wonder about the leadership at Tesla and the idea that he's making this much more personal and not understanding that he has a duty not just to himself, but to all the stakeholders in his companies to find a way to be cooperative with this government in some way or another, particularly given how much his business depends on government contracts.
Correct. And obviously Elon isn't functioning to the benefit of his shareholders and hasn't been for many years. And, you can take it any way you want, whether it's the purchase of Twitter, the, XAI, and now this whole political disaster. None of this has been good for Tesla shareholders, and I've been saying this now for years. The board of directors is so bad at Tesla, and let me tell you, there was just a letter that's many shareholders from institutions and pension funds had written the board of directors about Elon Musk and reining in this kind of behavior. And I can't assume that this isn't going to lead to massive shareholder lawsuits against the board of directors and Tesla for the loss in value from this behavior, which is clearly detrimental to its shareholders.
Why not make the change? Look, I understand that he has kind of a singular identity with this company, but why not just move him to like a chairman role or something and bring in a real operational person? I mean, you think about the success that SpaceX has, and a lot of people talk about that primarily because he's not really in there making the day-to-day decisions. He actually has someone competent running that, and I think that's why a lot of people, quite frankly, are championing at the bit for that company to go public. Isn't it now time? He's been at the helm of Tesla for so long, and you've seen the damage over the last couple of years. Why not just make that switch now?
Yeah, well, the next is going to be the damage to SpaceX, because SpaceX relies almost 100% on governments around the world and the U.S. government to fund it. And this is an easy target because we don't need to go to Mars, that's for sure. And so who's going to pay for all this stuff? And, the truth is that SpaceX valuation was probably cut in half today because of this behavior.
Gerber Kawasaki, President and CEO Ross Gerber there speaking to Bloomberg's Romain Bostic. Subscribers can watch us live and catch up on past interviews with our interactive TV function. That's at TV Go. You can also dive into any of the securities or the functions that we talk about and join in on the conversation as well. You can send us instant messages. Do check that out. It's at TV Go. This is Bloomberg. The latest from the corporate front now, and Broadcom stock fell in late trading after a lackluster revenue forecast suggesting that the AI spending frenzy is weaker than some investors had hoped. The company sees third quarter sales of just under $16 billion. It's about $1 billion below the highest estimates. The CEO, Hock Tan, says demand for custom AI chips next year will be much more than originally thought. Malaysia's state-owned oil and gas company Petronas will cut about 10% of its workforce as it looks to reduce costs due to falling crude prices. The CEO says it's reducing headcount by 5,000 and freezing hiring until the end of 2026. The company's net income tumbled 32% last year. Chinese ride-hailing company Didi has swung back to profit as it ramps up overseas expansion. Quarterly revenue rose 8.5% on the year to $7.4 billion, while net income roughly tripled. Didi's international segment grew transactions at a faster rate than its domestic unit, up by 25% from the same quarter a year earlier. Shery.
And Haidi, Japanese beverage giant Suntory says it's looking for ways to minimize the impact of the global tariff uncertainty on its products and business. Here's my conversation with CEO Tak Niinami. When it comes to those investments, of course, it also depends on, as you said, will consumers keep spending? And you talked about that anxiety. Despite the fact that you have had to increase prices, I believe that Suntory is increasing prices starting in October. How do you balance those two out? Because you have to deal with the cost of tariffs, but also consumers are pulling back. They want cheaper products.
Well, that's why we are in the uncertainty. If we should pass on to consumers, perhaps not. So we have to think about what to do with our portfolio. So we are now shifting to the innovative products, and we are picking up those product lines instead of the unprofitable lines or robust, such as we don't want to line up lots of soft drink. You don't want to. No, we don't want to. We want to focus on innovative, like energy drink, such as a coffee drink, such as RTD, which is ready to drink. And nowadays, we are thinking about non-alcohol drinks and less alcohol drinks. So we are shifting our portfolio where we have the R&D power to be competitive against our peers in the industry.
That was a Suntory Holdings CEO Tak Niinami there talking about tariffs. As we're getting the latest lines also from Japan, we are hearing from the government that the chief trade negotiator and Secretary Lutnick met just yesterday, and that they have discuss non-tariff barriers, also trade expansion. Akazawa strongly sought a review of the U.S. tariffs, and all of this as we're also contending, of course, with the downside when it comes to tech, given the ongoing very public feud between President Trump and Elon Musk. Take a look at how futures are trading at the moment, because you can see U.S. futures unchanged, but we had a downside on the Wall Street session with Treasury stocks all falling on that online squabbling between President Trump and Elon Musk. Elon Musk losing 14% overnight. You can see Nikkei futures also not necessarily doing much at the moment. The Japanese yen overnight weekend on that risk-on sentiment after news of President Trump and Xi Jinping actually holding a phone call for 90 minutes. Sydney futures also not doing much at the moment, but we will be watching the latest lines that come on developments when it comes to the Japan-U.S. trade negotiations at a time when we continue to see downside pressure on the Japanese economy. The April household spending numbers unexpectedly contracting 0.1%. The market opens in Sydney and Tokyo are next. This is Bloomberg. This is Major Market Opens with tons to digest for investors. Of course, we're just ahead of the very important payrolls numbers out of the U.S., but we have seen, Haidi, some optimism over the China-U.S. trade talks between President Xi Jinping and President Trump. But Wall Street just fell overnight given the ongoing online bickering between President Trump and Elon Musk.
Yeah, got to go and make some more popcorn to see what the next episode holds right in this drama. It's such a distraction, though, as you say. We saw a pretty clear-cut reaction when it comes to companies like Tesla. But broadly, the underlying trade, the US eco and Fed story continues to play out.
Yeah, downside of 14% for Tesla stock overnight. A little bit of rebound in the after-hour session early in the Asia morning. But take a look at how we're setting up with Japan, because we had seen the Japanese yen also seeing a little bit of weakness in the overnight session. Right now holding at that 143 level against the U.S. dollar. We had a lot of fluctuations in the U.S. dollar as well because of optimism over the U.S.-China trade talks. But at the same time, that downside coming not only from the unexpected weakless jobless claims rising, but also the fact that the ECB President Christine Lagarde talked about stopping rate cuts, and that really led to a euro surge. So we'll be watching Asian currencies across the board as we're seeing the Nikkei and the topics coming online to the upside of about 0.2%. We're watching JGB yields as well very closely. We had the 30-year auction that was pretty weak yesterday. We will be watching this space as well because we had household spending also surprising to the downside and contracting 0.1%, Heidi.
Shery, take a look at the open here in Australia as we get into this final Friday session. We are looking at a little bit of weakness, but mostly sideways trading to start off the session. This is an index, so still trading pretty close to those record highs when it comes to Aussie stocks. It comes at a time as we see quite a bit of that rally when it comes to broader Asian equities, about the highest in about 3 years still. But when it comes to Australia, we're watching sort of very keenly when it comes to some of the agricultural stocks, as well as trade-related stocks. There's ongoing EU-Australia trade negotiations, as well as a potential for tweaks to biosecurity laws to potentially allow some of that US beef to come through. Of course, that has been a key point of the beef, if I may say that, between Trump and Australia and the sort of trade negotiations there. The Aussie dollar at the moment holding at 65.13. We saw a little bit of a fade when it comes to how the US dollar reacted. We also, when it comes to FX, we're watching the currency manipulator report from the US Treasury, this time declining to name any country a manipulator, but still singling out China for what it says a lack of transparency and unfair currency practices. So watching the yuan in the session as well. Treasury is at the moment looking like this, and of course we saw quite a bit of action when it comes to the rally just kind of stalling as the ECB sparked the bond sell-off within the Eurozone. A lot of this will depend on how the jobs numbers later on Friday come to pass. Futures at the moment, we're looking a little bit to the upside when it comes to S&P futures, some weakness for the Nasdaq, of course, Shery, as we were talking about earlier, the weakness in Tesla, kind of the most clear expression of concerns over this Musk-Trump feud. The Dow up by just about 1/4%. Let's take a listen to what President Trump had to say regarding Elon Musk.
I've always liked Elon, and so I was very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. It's the biggest cut in the history of our country. We've never cut. It's about 1.6 trillion in cuts.
Let's bring in now Todd Jablonski, CIO and Head of Asset Allocation at Principal Asset Management. Todd, great to have you with us. And so, is this a distraction for markets more broadly that are kind of really trying to focus on fundamental developments in trade negotiations, in the eco data that we're getting towards the end of the week as well?
I think distraction is the right term. I wouldn't get too absorbed as an investor into what's going on between President Trump and Mr. Musk. I mean, overall, I think markets are really indeed finding their footing, in fact, and doing a pretty good job of it. Surprisingly, you've seen most major global capital markets, especially in the U.S., we've now almost completely recovered during certain points from sort of our bottoming out during the height of trade concerns. And despite all the concerns about tariffs, it looks like the U.S. is probably on pace for about 1.5% GDP growth. And in fact, it may happen with sort of inflation stubbornly coming down along the way. That muddle through scenario, we think, is an environment where, in fact, equities could perform well throughout the next 12 months.
How sustainable is this? Because how much of the data is perhaps being distorted by front loading that we haven't seen the true effect yet, if potentially, you know, these trade truces and the pauses run out without agreement? And how much are you also sort of watching the pressure coming from the fiscal side too?
Well, the front loading is real. It was actually visible in the first quarter numbers. And now that we're into the second quarter pretty deeply, you can certainly see an enormous pickup in economic activity ahead of tariffs coming in and the rush to get goods out of certain markets before tariffs kicked in and prices went up. I mean, look, the U.S. economy has been surprisingly durable throughout this entire endeavor. In fact, throughout all the challenges that came from the onset of the tariffs, you know, what I always ask my fellow investors is, you know, which is potentially more harmful to the global economy? The 10% tariffs proposed by President Trump, or shutting down all sort of travel and trade in the name of treating COVID. I think we would all agree the COVID treatment was worse for the global economy, but we knew it was going to be backed by a big fiscal package, and that's how markets were able to live with the disruption to the economic activity. Here, again, we are seeing that the big, beautiful bill promises more fiscal spending.
Todd, I find it very interesting that in your notes, you say that you've actually shifted to neutral in major asset classes. Perhaps not surprising, given, of course, the uncertainty right now out there. Is there anywhere across the world that you would be overweight or any asset class that you could still see some buying opportunity?
Yeah, well, I'm neutral on equities, and I'm neutral on the U.S. relative to the rest of the world. Within the U.S., I still like those mega cap U.S. equities. In fact, the Magnificent Seven and the rest of that entire sort of mega cap space have, in fact, really participated in the recovery off the lows. And you saw sort of a derating when the AI shine sort of came off some of the biggest names in the S&P. We like those names not only for a little bit of a continued valuation recovery, but man, it was a tremendous quarterly earnings report from the group, and from a secular theme, I do think mega caps could be an interesting place for investors to look at now and in the intermediate term.
I'm looking at the global bond space as well, because here in Japan, we were looking at JGBs with the 30-year auction surprising to the downside. Really, demand seems to be fading, not just in Japan, but across the world. We're talking Australia, South Korea, all showing pretty weak demand. How is the fiscal picture affecting really the appetite of investors right now as governments want to spend more?
Well, the debt watchdogs are certainly watching everyone these days. Whether it's on my side of the Pacific or on your side of the Pacific, you're finding investors more and more scrutinizing each nation's willingness and ability to repay. Look, from an investment perspective, I would highlight, developed investment grade and sovereign is an area where we're underweight. Looking out across the rest of the fixed income picture, I'd actually point to some pockets of EM in investment grade, particularly in Latin America, in Mexico, and in Brazil, as places where you can get a safe, stable, well-rated, and attractive level of real yield that's in excess of Asian EM and definitely in excess of DM sovereign yields.
We've seen a lot of movement in China's bond markets as well. When it comes to the broader asset space, is there anything that's attractive there?
Certainly, I think you're going to find, from issue to issue across the debt space, there's going to be attractive offerings. For me as an asset allocator, when I'm looking across the IG markets, in China, there's going to be times to be risk on. There's going to be times to play it a little bit more safe. But I think getting the right sort of strategy in place across the Chinese credit opportunity set is going to make all the difference in terms of getting to investment success.
Todd, really great to have you with us. Todd Jablonski, CEO at Principal Asset Management. And the broader view might be that this ongoing Musk and Trump feud is sort of a distraction for markets that are trying to focus on trade and trying to focus on eco-fundamentals. But you can see what a disaster it was for Tesla, for example. And we're watching Tesla suppliers that are in focus in Asia today. A bit of a mixed picture there. It's quite a bit of downside for Panasonic, a little bit for TDK, but others not seeing too much of a reaction. Tokyo Electron, for example, up by close to 1%, but Tesla sinking, what, about 14%? That stock is plummeting. The rout may eventually present sort of a buying opportunity, but the outlook when it comes to Tesla's EV business, of course, at the same time has been weakening. There was quite a bit of relief from shareholders when Musk suggested that he might be focusing less on politics and more back to his core businesses. Let's bring in for more our Bloomberg senior editor, Will Ferris. When it comes to the public war of words between the two former allies, and it's now quite extraordinary, the allegations and recriminations that are being slung about back and forth. I mean, in a way, was this surprising, or was it only surprising that all of this came out of the disgruntlement over EV credits and the tax bill?
Well, it's surprising in the sense that it was literally just 1 week ago that you had Elon Musk and Donald Trump in the Oval Office together, praising each other for the work they had done on Doge and the election, and really trying to seal up a nice departure from Elon from his work with the federal government. So I think this was always potentially going to be a volatile relationship. So the speed at which it has all unraveled in really the last 48, 72 hours is pretty stunning. And it's hard to know how they get to a better place between them and publicly when this big, beautiful bill, the spending bill, is still under a very serious debate in the Senate now and may potentially have to go to the House. So we have weeks of this legislation getting debated publicly in Congress, at the White House. And if Elon Musk is on the sidelines kind of sabotaging it because of his own slights or the perceived slights against him, it's going to make for a very messy negotiation process. So we'll have to see whether the two can somehow break bread or at least call some kind of a ceasefire here. But this is looks likely to continue as long as this legislation is under debate.
At the same time, despite the fact that all of these threats are going back and forth, whether the president wants to end his contract, whether Musk wants to end the use of the Dragon spacecraft, how feasible is this given the complexity of the business and how intertwined it is with government contracts?
Yeah, I mean, listen, SpaceX is really the only option. The Dragon capsule, the Dragon spacecraft is really the only option for the U.S. right now to get astronauts and food up and back from the space station. The space station is currently, it's always occupied. I mean, there are potential options out there. We've used the Russian Soyuz craft. You've got Boeing's Starliner, but the Starliner isn't certified. So I think there's going to have to be a way for these two men and this company, SpaceX, and the U.S. government to work their way through this so that the U.S. is able to continue that mission in space. I think SpaceX and some of Elon's other companies have gotten more than $20 billion in government contracts since 2000, according to Bloomberg government. It is heavily intertwined, but really the U.S. space industry doesn't exist separately from SpaceX being a part of it at this point.
Bloomberg senior editor Bill Ferry is there with the latest on that feud between the president, Donald Trump, and Elon Musk. We do have breaking news at the moment. HSBC's chairman, Mark Tucker, will be stepping down as chairman starting September 30th. He'll actually be joining AIA. We were sort of expecting this to happen after an 8-year, very turbulent tenure until this year. We know that before joining SHBC, Tucker served as CEO and president of AIA Group, so he might be returning to that company. And we're now getting breaking news that the HSBC's chairman, Mark Tucker, will be stepping down on September 30th. We had heard before that a successor and the search for that successor would be led by Ann Goldbehere, the senior independent director at HSBC, to replace him within the next 7 months. We have more ahead on the Asia trade. This is Bloomberg.
We are getting an update from Tokyo-based ispace Inc. saying that there's a high possibility that the lander made a hard landing on the moon. They're likely to have made that hard landing, and this, of course, after the earlier update saying that it attempted to make contact with its lunar lander after trying to become the first non-US company to reach the moon's surface intact, but they had unsuccessfully been trying to make contact with the moon lander. This was a mission that followed the first attempt in 2023, which was a failed attempt. We saw that programming error leading to a crash of the spacecraft. The prospect of success this time would have made it the third company to be able to park a spacecraft safely on the moon. We are hearing, though, it's likely that the lander made a hard landing on the moon. The broader sort of ambitions here for ispace is to send these spacecrafts more frequently to the moon starting in 2027, an aim of payloads 2 or 3 times a year, according to the CEO. But that resilience lander had been expected to touch down on the moon after 4 a.m. Japan time on Friday, but we saw that live stream by the company being ended ahead of time without confirming status of the mission after they had said that they were having issues maintaining contact with the lander. We're now getting an update that there's a high possibility that the lander made a hard landing on the moon. Well, back to earth, and the Trump-Musk feud has stolen the thunder from other major news, including that China and the US have agreed to resume trade talks in a long-awaited phone call between Trump and Xi Jinping. Our chief North Asia correspondent, Stephen Angle, is in Hong Kong. So this was sort of what was long-awaited for markets and analysts and geopolitical observers alike. Did we have any takeaways from this conversation?
Well, I think it brought the temperature down because, of course, when that truce was reached last month in Geneva, there were high hopes that these could be, basically that more talks would be in the works. But really what happened, there was a bit of a freeze on goodwill, and it kind of de-escalated a little bit until we had this call where at least both sides are saying nice things. The Chinese readout, which I'll get to in just a minute, was a little bit harsher, but Donald Trump assessing it as talks are in very good shape right now after negotiations got off a little off track, he said. Basically, many questions still remain, obviously, with the size of the differences on trade and geopolitical tensions between China and the United States. We don't know what kind of concessions Donald Trump offered Xi Jinping. The Chinese side has said that they would like Donald Trump and the U.S. administration to remove some of the pressures that have been put, the negative measures, I should say, on China that the Trump administration has placed on them. That is essentially the tariffs, obviously. We don't know what Donald Trump offered Xi Jinping. We also don't know what Xi Jinping offered, whether there could be a relaxation of the curb on those rare earth magnets, which the United States and Trump himself have talked about, wanting to see clear path forward on the relaxation of those requirements that exporters in China of those materials have to basically first get approval and licensing to export to the United States, which has complicated things and led to accusations from the White House that the Chinese have violated the basically good will generated from that Geneva meeting. Anyway, this is what Donald Trump had to say following the phone call from with Xi Jinping.
I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points. By the way, he invited me to China, and I invited him here. We've both accepted. So I'll be going there with the First Lady at a certain point.
So we don't know when Xi Jinping will go to Washington or when Trump will go to Beijing, but it will definitely be in the future. They also didn't mention when the next round of trade talks would happen or where those talks would happen. So there's still a lot of questions to be had and answered. But right now, there is at least encouraging signs that the temperature at the highest level between the two countries has been brought down a notch.
Yeah, as you said, Steve, I mean, they did say nice things, right? So the temperature was brought down a little bit, but at the same time, doing nice things is a whole different issue, and the pressure continues to mount.
Absolutely, the pressure continues to mount because there's this yawning trade imbalance between the two countries. There's a growing list of grievances that the two sides have, and they haven't had a lot of high-level dialogue. So there needs to be further dialogue. And then, by the way, there's also this deadline of the pause on tariffs looming in July. So, again, there's a lot to be had before the threat of further and escalated tariffs is removed. And also there's other issues because there's Treasury Department and there's Commerce Department. They have their own tack as well. For one, Howard Lutnick, he called for stepped up enforcement. He's the Commerce Secretary of the United States, by the way. He called for stepped up enforcement of U.S. export controls to China to prevent China from stealing critical U.S. technologies. He's urging more funding for the number of agents who visit warehouses and exporters to ensure compliance with these export controls. This is Howard Lutnick, what he had to say today.
They are trying to copy our technology, and in the race for AI supremacy, they are behind us, but they are working with the central government out to get us, right? To beat us so that they will have intellectual superiority over us.
So that's a different narrative than what Trump was saying today, obviously, that he was not saying to Xi Jinping that you're out to get us. But again, Treasury Department also has their issues on the currency front. In the semi-annual report on currency manipulation, the Treasury Department of the U.S. did not mention any nation as being a currency manipulator, but did single out China for its lack of transparency in setting its currency policies. So there are still fractious issues between China and the United States that's not going to be overcome by a 90-minute phone call between Xi and Trump. But it is, as I said again and again, it's brought the temperature down. It's brought the platform for a lower-level dialogue to continue. So perhaps we could have a more congenial summit, if you will, either in China or in Washington down the road. But I wouldn't say those trips are going to be made anytime soon.
Our Chief North Asia correspondent Stephen Angle there. More ahead here in the Asia trade. This is Bloomberg.
Higher tariffs and a stronger euro are expected to make it harder for firms to export. High uncertainty is expected to weigh on investment, but at the same time, several factors are keeping the economy resilient and should support growth over the medium term.
ECB President Christine Lagarde speaking after the central bank lowered its deposit rate for the 8th time in a year. The rate now at 2%. Since June of last year, the easing has amounted to around 200 basis points. Take a look at how European futures are trading early in the Asian session. Of course, we're watching the euro very closely because President Lagarde also talking about an end to the rate cuts, and that suggestion really leading to the euro to gain ground against the U.S. dollar. The U.S. dollar on the other side of that trade falling to this year's low. You can see right there the euro standing at that 114 level, while Euro Stoxx 50 futures are trending to the downside of 0.4%. The ECB lowered its inflation projections for 2026 to 1.6%, and officials do see risks to growth as tilted to the downside. But Haidi, of course, we are watching really Asian stocks, European futures as well, U.S. futures as well, especially what's happening in the tech space with that ongoing feud between Tesla CEO Elon Musk and President Trump as well.
Yeah. And all of this ahead of the key jobs numbers that we're watching as well, and whether that's going to kind of change the expectations when it comes to Fed rate cuts this year. But we're looking okay across the early part of the Asia session. It was about half an hour into the start of trading here in Australia. The Nikkei 225 up by about 0.25% as well. We're seeing that sort of full rally ahead when it comes to Korean stocks. Still, that exuberance post a very clear election result. These hopes of a quickening of corporate governance reforms and fiscal stimulus, all of that wrapping up in some of the enthusiasm over trading in Korean equities as well. Still ahead on the Asia trade, the future of food delivery arriving in Hong Kong as Meituan's overseas brand Nikita launches drone delivery services. Our interview with the company's vice president is up next. This is Bloomberg.
I've always liked Elon, and it's always very surprised. You saw the words he had for me, the words of, and he hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible. Elon's upset because we took the EV mandate, and which was a lot of money for electric vehicles, and they're having a hard time, the electric vehicles. I know that disturbed him. He wanted, and rightfully, he recommended somebody from that he, I guess, knew very well. I'm sure he respected him, but to run NASA, and I didn't think it was appropriate.
President Trump speaking in the Oval Office about his falling out with Elon Musk, and that really pressured markets overnight on Wall Street, despite the optimism that we saw with that easing of trade tensions between China and the U.S. Presidents Trump and Xi Jinping speaking for about 90 minutes. Let's discuss how markets will open in China in the next hour, with investors reacting to that. For more, let's bring in Asia equities reporter Charlotte Yang. Charlotte, so we didn't necessarily see a lot of the excitement when it comes to this trade optimism, given everything else that was happening in the U.S., but could we see that actually reflected in the Chinese session today?
Yeah, so I think it's for investors, it's really good that this call has happened, and it's seen as a necessary step to pave a way, for more trade talks, more to figuring out all the details. But just based on overnight, I think the Wall Street reactions was quite muted. If you look at the Nasdaq Golden Dragon Index, it was only up 0.5%, and also the key blue chip heavyweight like Alibaba pricing actions was really muted as well. So I think what this shows is that the market has already baked in that there will be, a resolution, and they do see incentives from both China and the U.S. To come out with a resolution. And what we're not seeing so far is that those core underlying issues of this trade relationship getting tackled. So before that thing, the pricing actions today could also fall in overnight to be quite muted. If you look at the setup, the valuation is no longer cheap. You have the Hang Seng China Index trading at 9.6 times PE. That's higher than average, and also they've already, I think it's about 2% more than after erasing all the losses from Liberation Days. So the bar isn't that low, I think, for an upside surprise from just the call.
What sectors should we be watching out for? Obviously, there was a bit of a throwaway comment when it comes to rare earth magnets from President Trump in that debrief.
Yeah, so rare earths is definitely one to watch, as President Trump has signaled out the sector. But the Chinese shares yesterday has already had a big rally. So we'll see, how actions goes today. And then also education, which is in Hong Kong, such as Oriental education, as Trump has said that he now welcomes Chinese international students to come to the U.S. And also, so these are the two key sectors for the trade talks. Other than that, I think EV is also in action after the Chinese government is now bring up this focusing on the price war going on the sector. So we'll see if there's any pricing action there.
Bloomberg Asia equities reporter Charlotte Yang there. Well, Chinese food delivery giant Meituan is betting big on drone deliveries to aid its ambitious international push. Our Chief North Asia correspondent Stephen Angle joins us now with more. And Steve, you had this great conversation with Meituan's VP in charge of drone deliveries. In terms of locations and markets, is there a priority one?
Well, I think Hong Kong is a good opportunity, and they launched today their first route up in the north between Tai Po and Ma On Shan up at the Hong Kong Science and Technology Park. It's just two vendors right now, merchants, McDonald's and Pizza Hut, where they can deliver to hungry scientists up there in the science park. But they really see that drones are a great opportunity to reduce the time of delivery from 1 hour with riders on scooters to about half an hour point-to-point deliveries over very unpredictable terrain and weather in a place like Hong Kong. So the ultimate goal is deliveries within 15 minutes. Yeah, they can't deliver right to your balcony in a high-rise yet, and they could employ in the future humanoid robots to do that. We're getting a little ahead of ourselves right now as they launch this first trial. But also, essentially, the vice president of Meituan, Nikita, is the brand as it's known outside of China. That's Yinian Mao. He tells me that overseas markets are definitely a priority, and you're kind of seeing a push towards the global south, in the Middle East, Brazil, and elsewhere. Dubai is the next one. This is what he had to say in a wide-ranging conversation.
I think globally, in many, many major cities, there will be low-altitude logistics network. That's our vision. Number two, out of all instant delivery orders, we're looking at maybe 10%, 15%, roughly that ballpark that can be delivered in the air. And in some scenarios, for example, emergency supply, medical delivery, you may see a lot more adoption, higher percentage of penetration in those segments.
So where's next? I'm hearing Dubai. What are you doing in Dubai?
Yeah, so we just received our commercial license in Dubai. That's December last year. And we're opening up some new routes this year as we speak. It will be highly visible. It will be on the waterfront of the Dubai Marina or some Bay Area. So we also want to raise awareness in that city because people know there's a drone delivery, but they cannot experience it yet. A lot of people are not covered by the service. We want to cover more. We want to cover in more public areas.
Where else are you potentially looking at? I mean, obviously international expansion is how much of a priority?
I think it's very much on our priority today because if you look at mainland China, right? So Meituan is the biggest player in terms of instant delivery and everyday services, but we are not that big player yet overseas, right? So that's on our priority. Secondly, for us, especially for tech-driven, service provider, replicating tech is as a service is relatively easy than replicating a team of personnel on the ground. So we want to bring our expertise to other countries, serve other users, and we got to do it step by step, but we are also making progress.
I understand you have about 40 routes in Shenzhen?
Close to 50 now.
Close to 50,
yeah.
But I heard 55 nationwide.
Yeah.
So mostly in Shenzhen. Where else can you expand, and will you be expanding this kind of service in mainland?
The second city that we choose after Shenzhen is Shanghai, because you also have Huangpu River. The Shanghai is separated into two parts, like Pudong and Puxi. There's a Huangpu River right in the middle.
There's logistical challenges with the river.
Exactly. Both a challenge and an opportunity, I would think. From day one, it has been a challenge for us, always. We're looking into new technologies where possibly, drone can deliver to a balcony. That's one technical area where we're looking into. Secondly, we're looking into robotics technology where a robot can help you to pick up the order from outside your apartment building into your apartment or right in front of your apartment door.
How far away from that? I mean, how far in the R&D process are you?
I think we're looking at the 5-year scale, but I believe the progress has been made. Not only us, right? A lot of other robotics companies are making progress today.
From sandbox to commercial viability, when do you see that happening first in Hong Kong?
I would say maybe in 3 years.
3 years.
Yeah.
What about in Dubai, where you're now launching?
Probably 18 months.
18 months to have commercial viability?
Yeah.
So
some selected routes. We have selected routes too. Yeah.
How do you see the competitive landscape in China and Hong Kong changing the way and the urgency that you have to roll out this kind of technology?
We're going to turn back to norm. And that's basically cost, revenue, margin. And I believe in the long run, tech-driven innovation can drive costs down. That's in the long run, but in the short term, we need more investment.
And I think today's launch in Hong Kong is critical because, again, Hong Kong, yes, is part of mainland China, but it has a different regulatory framework, and they have this sandbox, which they're testing this to essentially grow the low-altitude economy. But it's going to take some time to go through the regulatory steps. Also, this is a highly competitive food delivery market already with Meituan or /Kita app here in Hong Kong has already driven out Deliveroo. They left the market a year or so ago, and there's Foodpanda and Kita and a few other smaller players. So it'll be interesting to see whether drone deliveries over very interesting topography and bad weather potentially in Hong Kong with typhoons coming every summer, whether that can make the competitive landscape change even more with drone delivery. And by the way, in Dubai, the big challenge there environmentally will be the sandstorms, and they might just have to have much more maintenance with sand potentially getting into those drones. But essentially, these things are waterproof, so Hong Kong should be okay.
Really interesting conversation there. Stephen Engel, our chief North Asia correspondent. We have more ahead on the Asia trade. This is Bloomberg. U.S. trade officials are meeting their counterparts in New Delhi this week as they aim to finalize a tariff deal. Commerce Secretary Howard Lutnick says he is very optimistic an agreement could come before a July deadline. Bloomberg Economics now saying that India may only face a mild negative impact from Trump's trade war. With us now is Nikita Singla, South Asia scholar at Carnegie, who has advised the Indian government on trade and logistics. Nikita, Great to have you with us. Bloomberg Economics thinking that at the current 10% rate, it should be fine for India, not to mention that they have a tariff advantage compared to, say, China. Would this be the case? Are Indians at an advantage, especially given the tensions against rivals like Beijing?
Absolutely. So I thank you so much for having me in the first place. And, I think tariffs are very crucial to this US-India discussion because this could really be a game changer in how the trade agreements are being set. Of course, the 10%, but also India is seeking concessions on reciprocal tariffs, as we know from these discussions, and better access to the US market for labor-intensive sectors such as textile and leather products. So all of this in combination will be very crucial for the tariff discussion.
What will be the key hurdles?
So, one is primarily the agreement on tariffs because the US is wanting lower tariffs on some specific goods like agricultural products, automobiles, and some medical devices. And India, as I just mentioned, is seeking concessions on reciprocal tariffs and also on, textile and leather products, better market access. And US has implemented this 90-day suspension of 26% reciprocal tariff on Indian goods, but this is set to expire on July 8th. So I think this pause really intensifies efforts to reach a trade deal before the deadline. And secondly, the products that specifically US is looking at for better market access in India is, some of the agricultural products like corn, soya bean, and also alcohol and automobiles. And India is expected to open its protected sectors. It has already cut duties on bourbon whiskey to 50% from 150%. But I think there are more hurdles with respect to opening up of the Indian protected sectors because at the same time, dairy and all sectors need to be protected in India. And the second one is defense very quickly because, at the recent US-India Strategic Partnership Forum in DC that was held, US Secretary of Commerce said that there were certain things that the Indian government, and I quote him, did that generally rubbed the US the wrong way. And he was referring to India buying military gear from Russia. And I quote data here that according to Stockholm International Peace Research Institute, Russia has been supplying about 36% of India's arms imports between 2020 and 2024. And this number, if we compare it to the previous set of 4 years, was 55% between 2015 and 19 and 72% between 2010 and 14. So this has been coming down and India is definitely looking to diversify. And the other two issues are, one is, which has been holding the talks is data localization because India has been in the view of data localization, which requires companies to store certain types of data within India. And the last is the visa and immigration policies where India has been pushing the United States for eased, H-1B and other visa rules for Indian professionals.
Right. There's a lot of specifics in there, but we know that from history, President Trump's deals tend to be quite sweeping and top level, right? What do you expect that an agreement could look like? Do we expect a certain level of, specific detail, or is it just going to be low-hanging fruit, at least at first?
So, I think this agreement has to be about specifics because an overarching deal may not really serve the purpose. So though a mini deal could be considered as a way to address low-hanging fruits, as you just said, but, a proper phased sector-wise tariff reduction plan is, I think, very critical to the success of this, with probably safeguard clauses for some of the sensitive sectors like dairy in India and automobile in India. The second is, I think, my opinion is that India needs to actually have an agreement with the United States on some of the visa and immigration related policies, because that has been a long-standing concern between India and the United States. We have a waiting time of over 1 year at several of the consulates. So maybe, in return of these tariff concessions, there could be an agreement about opening more consulates and reducing that queue time on the United States visas. And another aspect of specifics about this agreement could be something on trade facilitation. Actually, a lot of discussion that happens between any two countries on a trade agreement is generally at a very macro level, what happens on a trade policy level. But there is relatively lesser discussion on how the trade actually moves on the ground. So that is where the trade facilitation element comes in, and that's actually area of my specialization as well. Because we need to see how are goods actually moving across our ports and what is it that the United States and India need to agree on there. And I'll give you two very specific examples in the interest of time. There could be some collaboration between the US Food and Drug Administration and India's Food Safety and Standards Authority where actually we share risk-based intelligence in terms of the food imports that could actually reduce the time that it takes for inspection and increase supply chain resilience between India and the United States. And the second aspect has to be about the security of trade, because security of trade is increasingly linked to the security of nations now. So while there's so much focus on improving cargo speed, we saw in 2018 the port of San Diego, one of the busiest ports on the West Coast, it actually experienced a ransomware attack that critically impaired terminal operations. So in light of all these incidents, there needs to be appropriate focus on improving cargo security as well, for which there could be a partnership between CTPAT, which is Customs Trade Partnership Against Terrorism program in the United States, and the Authorized Economic Operator Program in India. These are just two names for the Trusted Trader Framework. And the last one before I finish on this is we also need to have some kind of a gender provision in the trade agreement. This is generally an area that's overlooked in trade agreements. I believe, if I'm not wrong, Canada-Chile Free Trade Agreement was one of the first modern FTA to include a dedicated chapter on gender and trade. So we need some sort of a cooperative framework for capacity building of women-led MSMEs and sharing best practices for women in trade, or sharing disaggregated trade data by gender.
Which sectors would you be looking out for in terms of the first sort of beneficiaries?
That's a tough one. I would start with, probably agriculture and food processing. See, when a trade agreement like that is signed, it is going to have a sweeping impact on multiple sectors. But I believe agriculture and food processing to start with, because the US interest is to have market access for, nuts, for apples, pulses, dairy. And India, while it wants to protect its small farmers, but it still wants to modernize its agri-tech. The other big one could be pharmaceuticals and healthcare, where India's strength lies in generic drug manufacturing, and the US could actually benefit from affordable medicines and from pharma supply chain diversification. I would also like to talk about IT and semiconductors, because again, India has this edge of large IT talent pool. And, it wants to become a global chip and electronics hub, and US needs more trusted partners. So there could be several of these sectors: renewable energy, defense, aerospace.
Yeah. Really plenty of areas where the two can engage. Nikita, Singla, good to have you with us, South Asia scholar at Carnegie. And when it comes to India, Japanese beverage giant Suntory also saying that it's increasingly looking to do more business there. CEO Tak Niinami cites the massive potential of the nation's rising middle class.
We have to have more commitment to the Indian business, because not only the population, but also the fact that its middle class is growing rapidly. So I think because of the lots of smart people and a lot of talented people. So I believe in Prime Minister Modi's idea, which is Make in India. They need a manufacturing skill set. And perhaps Suntory and Japan's manufacturing industries can support and work together. And India can become, in the future, the hub, maybe to go to the some other areas, countries, and regions of the global south, such as Africa from India. So I think Japan we have the very big vision working with India.
Tak Niinami there of Suntory at our Bloomberg Japan Ahead event last night. We have more ahead. This is Bloomberg.
Take a look at Tesla suppliers in the Asia session. Of course, this is really the most sort of direct way that investors express these concerns over the ongoing Musk and Trump feud, the conflict just continuing to worsen. You're seeing quite a bit of upside for most of those suppliers, but some downside there. Panasonic off by over 3%. This after Tesla's own shares dropped about 14% after Elon Musk and President Trump engaged in what has been an escalating public feud on social media. The criticism over Musk's comments about the tax policy, Musk then also firing back on a variety of fronts. And really, this raises the question of how this impacts Musk's portfolio of companies, including Tesla, but also SpaceX, the market value of Tesla and the ability to deploy autonomous vehicles, as well as what happens when it comes to that threat to decommission the Dragon spacecraft immediately in light of this feud. The escalation, of course, raising $34 billion from Musk's personal net worth, the second largest loss in the history of the Bloomberg Billionaires Index. We track the 500 wealthiest people on the planet. Post by post, a day of online sparring just chipping away at Musk's status as the world's richest person. Well, speaking of space, and this was a Japanese lander that was launched into space aboard one of Elon Musk's SpaceX Falcon 9 rockets back in January. We have seen a second attempt here also fail when it comes to ispace's second lunar lander attempt, failing after contact was lost with the lander. We had an update earlier that suggested that it's a high probability that the lander made a hard landing on the moon. The loss of contact and the likely hard landing dealing quite a blow to Japan's commercial space industry. It follows a previous unsuccessful attempt in 2023. That also ended in a crash due to a programming error. Countries really racing to explore the moon and to become the first non-US country to be able to do this. ispace planning to send landers to the moon more frequently in 2027, but we're seeing the shares set to fall by a daily limit. This is Bloomberg.